Just about 8-10 minutes remaining for markets to shut. 47 points higher for the Nifty, and it's recovered a little bit. So at a point of time, as we told you, the low was around 8,743. So we've almost recovered, those sort of losses. But again, nowhere even close to where we were, 8,847. So still about 60 to 70 points of the day's high. Let's look at the mid-cap space. I think there we have not seen a recovery. So we were continuously down, and we were up 1.2%, then we went into the red, and I don't think that we've come into the green. So the small cap index, yes, has come. Mid cap index has recovered, but very, very marginally. It's not a very, very broad-based recovery. It's just an index level recovery that we are talking about. Mayuresh Joshi, fund manager at Angel Broking, is now joining us. Mayuresh, good afternoon. The sense that you get with the markets getting volatile, are we changing? Markets generally get volatile when they change their direction.
Afternoon, Pankaj. I think clearly market volatility is here to stay, at least from a short-term perspective. And what really happens with the Fed actions will determine the next course of markets. To a large extent, with the kind of data that has come out specifically on the retail side, the expectations of a Fed rate hike seems like a very low-key possibility in this policy. Again, I think what we've seen domestically in terms of inflation data and expectations of a bumper monsoon is giving hopes that a rate cut might be around the corner. So if not in October, at least one rate cut expected before the end of this year. And that again will have greater chances of liquidity easing into the markets. Secondly, I think the corporate earnings situation or scenario is improving, and over the next few quarters, we should actually see some amount of re-rating happening across sectors, and that will probably lead to a re-rating in the markets itself. And third, I think the government reforms and the capex programs are in the right direction. I think the private capex does follow suit. My own sense is that the earnings of 14-15% that we are probably perceiving for FY17 and FY18 improving thereafter should start playing out, which again would lead re-rating to the market. So I think any opportunity or any corrections onto the market becomes opportunities for long-term investors. I remain extremely positive onto the Indian markets.
Right. And what is the correction that you would look at? As you said, 8,500, 8,550. So not more than about a 3-4% correction?
I mean, ideally looks like at this point of time, and if that does happen because of any unforeseen conditions or because of global volatility, I think it will become an opportunity for long-term investors who probably missed the bus in the past few weeks. So yes, I think if the markets do correct at those levels, I think that becomes a good starting point or an accumulative point for long-term investors.
As far as some names are concerned, how would you look at Reliance Industries? Do you think they are getting into a free cash flow generation sort of a mode, and that is something which the markets always like?
Again, I think the story is going to get played out over the next couple of years, because a large part of their capex, whether that be on their core petchem or refining, is almost through. You're expected to see commissioning of a few facilities, whether that be the petcoke gasification, or you're talking about the PTA plant being commissioned, the residual part of it over the next few quarters. So in that sense itself, I think the earnings will show improvement in the core business areas. Again, the telecom capex has been laid out, so I think a large part of the capex is behind them, which is basically brought down their ROEs sub 12%. So largely, I think as these businesses start contributing, and refining and petchem are contributing significantly, the telecom, again, I think one does not ascribe any value probably over FY17, but largely I think as they pick up mass, and again on the different business verticals like organized retail, which has been doing well, I think over the next couple of years the earnings momentum should start continuing, which will entail greater cash flows, as you rightly say.
Right. Let's just look at Wockhardt. There has been a sudden sell-off over there. So it was around the 920, 925 mark. Let's just look at Wockhardt. I think there has been a sell-off. There is a clarification which has come in from the management regarding news flow that was appearing regarding Chikalthana facility. Let's just look at Wockhardt. I think it will give you a sense of what I'm talking about. It's around the 820 mark, 920 mark, and it's suddenly fallen to 905. They have no additional information other than what is provided to exchanges. That's what they have said, and probably saying that it's not something which they would want to comment on. That's essentially the news flow that they are giving. Mayuresh, any view as far as Wockhardt is concerned?
I think I'm not covering that stock, Pankaj, but largely I think for the pharma space, FDA concerns have plagued earnings for the better part of last fiscal, and one really assumes that the next few quarters, the remedial and the remediation costs and issues will take up the forefront and costs as far as pharma companies are concerned. However, I think if you look at their ANDA pipeline and if you look at the niche products that they're operating out of in the generic market, specifically out of the US markets, I think that is a significant value addition and contributor to their balance sheets. So my own sense is that pharma as a pocket is something that I still continue to prefer. I think selective pharma companies' valuations might have become stretched, but few pharma companies, I think their earnings profile still looks very, very attractive over the next couple of years. So pharma as a space, I'll be stock selective, but clearly I think the space should do well over the next couple of years.
Right, but specifically to Wockhardt, no particular coverage?
No, I don't cover that stock, Pankaj.
Right. What would be your top picks in the pharma pack in the pharma pack, and how important is the US FDA over there? Do you think US FDA, the problems that we had started to see over there have started to come down, or we can say that the Indian pharma industry has adjusted to US FDA's new norms?
No, again, I think complying to whatever compliance requirements are there has become a key parameter, and whatever observations have been pointed out by the FDA for various pharma companies, I think are a step in the right direction. If it does step up compliance costs for pharma companies, but it also ensures that they're giving qualitative products to a generated and regulated market like the US. Again, I think the US market possesses or gives huge amount of opportunities for pharma companies, both in terms of niche drugs as well as a lot of drugs going off patent. So in that sense itself, I think huge opportunity exists in niche fields, and you can name any field, whether that be ophthalmics, cardiology, you can name dermatology, and there are various sub-segment and applications that have been done by various Indian pharma companies who can actually reap the benefit once these applications go through. So in my sense, again, pharma companies are in the sweet spot, and as mentioned earlier, I think the FDA concerns and remediation issues which plague them, probably I think FY18 should be a better start for them as a whole over the next couple of years.
As far as Yes Bank is concerned, there's been a 20% correction from the highs. Would you buy, or you would still wait?
No, valuations had become stretched. It was not just for Yes Bank. I think for the private sector banking space as a whole, you'd probably see book values expand significantly in a scenario where credit growth was still in higher single digits. Again, I think the presumption here is that double-digit credit growth over the next few quarters, assuming credit costs going down, and you're probably assuming asset quality pressures receding, is what is keeping momentum in these stocks. But one really needs to look at how their book values are playing at this point of time. And to a large extent, I think FY18 numbers on a price to book parameter for most of the banks are looking stretched. So I think any meaningful corrections on the larger private sector banks does become good buying opportunities. But one really needs to distinguish even there between retail and corporate. But I think both these sub-segments within the larger private sector space present interesting opportunities. But you need to wait for declines, as valuations, in my opinion, are looking fair at this point of time.
Right. Just stay on with us, Mayuresh. Markets are about to close, about 90 seconds remaining for markets to shut. Let's just look at the Nifty, which names actually did particularly not that well. So Nifty up 37 odd points, Sensex about 180 points on the higher side, but significantly off the day's highest point. BHEL 153 was the day's high, 146 is where it is closing at. Bank of Baroda down about 1%, 164. BPCL up 2%, 579. Tata Motors 1% lower, 550. Yes Bank 4% decline. Again, it went into the green, so they did see a decent amount of correction from the highs. ONGC hovering around the 251 mark, NTPC up around 1%. Tata Steel 2% decline, 358. Tata Power up about 0.4. Adani Ports up 1.2%, and HDFC Limited down actually about 1% or so. Infosys up 1.3%, 1056. Kotak Mahindra Bank down about 0.2%, 806, almost 0.25% decline. Bharti Airtel up about 0.4%, 323, 324, 35 paisa higher. Z Entertainment 520 rupees on the 520 rupees, a 2% decline. Wipro was up 0.3. TCS was up 1.7, Cipla was up about 1%, and HCL Tech also did particularly well, was up close to 0.7%. Tata Motors DVR down 0.4%, 350. Markets are just about to shut. In the next 2 to 3 seconds, you should have the closing bell coming in. Markets have shut for the day 37.8 or 37.7. That's the provisional close, but I think it'll be subject to a lot of changes. Lupin down about 1%, and Asian Paints also looking on the lower side. Grasim was among the top gainers. In fact, the top gainer on the Nifty, 4,850, 122 for Grasim Limited. iShares was also among the top gainers, 23,000 now for iShares. That's up close to 2.7, 2.8%. So that's another name that did exceedingly well today. iShares was up 2.7%. ITC was also among the top gainers. That's a heavyweight name. Actually, ITC held on, or because of ITC and Reliance, market has held on in the last few days. Otherwise, the correction would have looked much bigger. BPCL 2% higher. Hero MotoCorp close to about 2% higher. Both Hero as well as Bajaj did well. The entire two-wheeler pack actually did see some good amount of buying. Axis Bank up 1%, 599. TCS was up 1.7%, 2,368. Technology as a pack did well, especially the large cap tech names, and also auto as a pack did particularly well. So iShares was up, Hero was up, Axis was up, Maruti did well, Bajaj Auto did well. All the two-wheeler names were doing decently well. HDFC Bank, Adani Ports were some of the other gainers to the tune of about 1% or so. Let's look at the losers as well. So Yes Bank was the top loser. It was down close to about 3.5% and 20% since last Wednesday. That's when you would have seen that QIP, 1,174. BHEL was down 2.2%. 146. It's done very well after the results, but now hovering around the 145, 150 mark. Tata Steel, after results, third day in a row not doing that well. 2% decline, 359 for Tata Steel. The day's high was about 366. Z Entertainment, 2% decline, 520. Hindalco was down about 1.6%, 143 for Hindalco. Asian Paints was down about 1.4%, down to about 1,157. Tata Motors was also lower. It was down 1.2%. HDFC was down about 1.4%. And broadly, this is what the large cap space was looking like. As far as the mid cap space is concerned, Walkhard 8% higher, 910. There was news flow regarding the Chikalthana facility, and that's about 8% higher. J&K Bank up 5%, 82 rupees as far as Jammu and Kashmir Bank is concerned. Balrampur Chini up close to 5%, 107, 108 for Balrampur Chini. United Breweries Holding, Sugar Pack also particularly did well. We're talking to Mayuresh. He's still with us. Mayuresh, any view on the auto pack? Let's start with two-wheelers. Would you be a buyer despite the up move?
No, again, one really needs to define, Pankaj, what kind of a view are you maintaining from this point of time, because valuations definitely are looking fair, specifically if you assume that volume growth are expected to grow at 10 to 12% for the better part of the next few quarters, assuming good monsoons and the 7th Pay Commission recommendation playing positively on the two-wheeler stocks. Secondly, I think you've probably seen some amount of input cost inflation taking place. How they're able to successfully manage the average selling price considering a better demand situation is something to be watched out for. So largely, I think maintaining a very optimistic view on the two-wheeler pack, but one needs to have a longer time frame in terms of holding from these levels, as valuations are fair, and one really needs to wait for corrections onto these stocks over the next few weeks and buy in a staggered manner.
Mayuresh, thank you so much for taking out time for us. Hope you have a great weekend.
Thank you so much.
After this Friday. 37 points higher for the Nifty. I don't think we have the adjusted close. 37 points higher. It's not changed much.